Hello everyone, welcome to Engineer Investor. So I have started creating this channel to record my views about the share market and stocks, how to buy and sell, what it is basically. So as you can see here, a company is an entity wherein it will have lot of investments, lot of infrastructure capex is required to run a company. For example, if I'm a mechanical engineer, so if I'm running a company which produces some brake shoe linings, for example, so what do I need? Then I need capital. Capital is nothing but the fund. So I need a lot of fund to set up the office. So for office, I have to buy some machines. For brake shoe lining machining, I have to buy some machines, and then I have to buy some cleaning agents, and then I have to buy raw material, and then I have to machine, and then I need manpower to do the machining because one person cannot, produce large quantities. So I may need a few engineers to design the brake shoes, and there are some operators to run the machines to produce the output. And also I would be required to have a purchase person wherein he initiates purchase order and uh, get the parts in turn. And also a customer, most important is customer representative. So I should have a person who can be a point of contact to the customer will send inquiries to the marketing team. So these all will involve lot of money. So where I can get money, for example, let's say I have 10 lakhs rupees. So with the 10 lakh rupees, I can, I can buy one machine, for example, to say 5 lakhs it will go. Then I have to do the operator work myself, and then engineering work myself, and the marketing work myself. Everything I have to do on my own. Okay, so when it expands, or when I want to do it in a good scale, then obviously I need lots of funds. So I can approach either friends or with family members, relatives. Sorry about the little disturbance I had here. So the company has lot of the company requires lot of investments. So what I do, friends, family, relatives, I can ask. Otherwise, I can ask to bank. I can get loan, and then one more option is giving the shares. I say that you give me this much, a part of the company becomes yours. So like that, I can sell the company, break the company into different shares, number of shares, and then trade that shares to get money. So this is the like a first time activity. For example, if I want to expand, I need lot of money. Say for example, 10 crores I need. So what I will do, I will put a lot of shares in the company. I will say that I'll purchase. About that, I got a little bit distracted and disturbed by my kids. So the company, which started trading shares in place of to get investments. So that's how, as you can see here, there are small dots I have put in blue. These we can consider as the shares, wherein the whole outer circle is the company. So this company can have n number of shares according to the size and the valuation of the company. So when it comes to the company, single owner or a few partners, generally they will be there. When we initially start, for example, if I start with my own money as an investment, I am the single owner of the company. I can say that I am a proprietor. And wherein if I take some money from my friend, then I can say I have a partner. So he is also put money, and he also may work for us for the company. So it's a partnership. So these are typically what we know until now. And then when it comes to the when we uh, when we share convert the shares, we break the company into shares, and then we sell to the public. Then becomes the person who buys these shares becomes shareholder. So they are also part owner of the company. Next, so what is equity shares? So equity shares is nothing but a valuation of a piece of paper or a share that is in a dematerialized format. A company, when in need of money, sells its shares to the investors and gets money from them. This money they can use for infrastructure, to buy machinery, and to develop the company. This is the initial offering shares to raise money is known as IPO. They say IPO, initial public offering. This is the first time they are, selling shares to the general public and getting the money. So that is the initial public offering, IPO. What is investor gets in return? If you see, the investor gets in return, confirmed share. That means investor who invests money will have the ownership shares with them, which can be traded to the other to encash it. So it is like a bond, or we say that a debt instrument. So if you are getting a debt, then you are signing an agreement and telling that I am buying you this money for this much period. I will give you back this money on this so and so date with the interest as said. So that is like a debt. So similarly here it is shares. Only variation is the shares will vary in value. Say for example, today I am buying an IPO company, IPO share for 10 rupees. So after 3 years, it may be 30 rupees or it may become 1 rupee. So there is a risk involved. So that's why we as investors we has to do a proper analysis of the company before buying it. So owner proprietor. Post IPO release, the company owner will get the money which he may use for expansion. Say for example, I have a company of 1 crore capitalization and I want to grow it. I need some 3 crores, for example, for expansions. So I go for initial public offering, IPO. So lot of people like you and your friends and there are other people, XYZ, any person can buy the shares. So what they do, they pay the money and they buy shares. Whatever they pay, no, that money will come to me because I am the owner of the company. I am selling my the company shares. So that money I will use for developing purposes like building a new plant at a new location, or getting new machineries, or getting new manpowers. Like that I can use. So this investors' money in the public offering is what is comes inflow to the company. Once it comes, no, then what happens? Say for example, some Mr. X has purchased the 10, 10 shares for in the IPO opening. So against the 10 shares, he has paid, let's say, 1,000 rupees. That 1,000 comes to the company. After that, he can sell that the 10 shares to Y person or Z person or A person or B person. So when he sells, nothing comes in flow to the company. Secondary sales are not, the monies will not get transferred to the company. So that is to the shareholders. So if the company performs well, if I'm using that 3 crores or whatever I got from the IPO, I'm using for a better purpose, and then I'm getting more business and adding generating revenues, my worth will increase, the share price will go high. How? Because more people are interested to buy the shares because the company is performing well. They want to get rewarded, so they buy shares. When they buy shares, the value of the price money of the shares will increase. So that's how it is. Sorry, I don't know how many times I will get disturbed because this is a. I'm not a regular YouTube channel guy, so I don't have any recording setup at all. I just started doing this, so I'm getting a lot of disturbances in between. I'm sorry about that. So that's how the share value will increase or decrease according to the performance of the company and the interest of the people who are buying shares. Okay, for the so next is control and governance. So SEBI, Security Exchange Board of India, monitors and controls the activity of shares of a company. So company cannot involve in any issues, wrongdoings, and fraud activities. These are all monitored by the SEBI. SEBI is known as Security Exchange of India. controlled by the SEBI. And companies those trade in secondary market to public need to get approved by SEBI. SEBI is the governance body. They monitor and control the activities of the company. So any major events a company is going through they have to intimate to SEBI. So how to participate in investing? To start trading of shares, you need to have a bank account. So first thing, we should have a bank account. So when we have a bank account, we can open a demat account. So the bank account what we have can be a normal savings bank account or personal savings bank account. Salary, even some people I have seen salary account also they can use. So we should have a bank account, and then we have to open a dematerialized account with any. Even bank also can offer demat services or brokerages like Zerodha, Upstock, and there are a lot many uh, third party brokers are there who also give the service of stock selling and buying. And one more thing is where we have CDSL and NSDL. They are the central repository. So whatever stocks we are sell and buy or get registered in NSDL or CDSL according to the broker. So there are two layer of security is there. One is with the broker. Broker can have, for example, Zerodha, I have stock account. So Zerodha will have list of stocks, how many I have, what date, what I have purchased, what date, what I have sold, all information they have. And the same register is available with the NSDL or CDSL also. Tomorrow, if the stockbroker Zerodha, they close the shop and go, then I can approach CDSL or NSDL and I can get all those shares transferred to new broker or another broker. So that's how two layer of security safety is there. So we don't have to worry about uh, where the stock will go if the stock broker gets corrupted. So for that reason, if we are very nervous, we can go and open an account with the bank itself. Bank also, for example, ICICI Bank also, securities, ICICI Security, alerts demat account. So I can have ICICI Savings Bank account as well as ICICI demat account. Only thing is in ICICI, in these banks, they charge more. The brokerage charges are more. In these third-party brokers like Zerodha and IndMoney, Grow, the brokerage charges are very less. Comparison of various brokerage charges. So as you can see here, there are Zerodha is offering zero fee, Upstocks zero fee for equity purchases. Equity purchases means stock purchases. Okay, intraday F&O, I don't want to touch base on that. I'm not a clear. I don't have much idea about it, and I came to know that many experienced people are saying these are not good. Don't go to futures and options. So here you can see you can compare AMC annual maintenance charges. So 300 rupees they charge every year, and here it changes between the brokers. We can open with any we are comfortable. So that's how today summarize what we have seen. What is shares? What is a company? What is a share? Who is a share owner? Who is a company owner? And then what is NSDL? What is CDSL? And then what is demat account? And what is a bank account? So these we have seen. So in simple, I want to start trading. What I do, I open a bank account. I already have a bank account. I open a brokerage account. Brokerage account is, for example, with Zerodha. So I approach Zerodha. They'll give you a form. I fill the form, attach PAN card, Aadhaar card, and photo, everything. Within 3 days, the account gets opened. So I will get my account number, and I can start trading from third or fourth day onwards. I can buy and sell through that. Yeah. Thank you.